It's your boy Crypto Blood, and welcome to another episode of My 2 Cents. This morning we're looking at, as if we were surprised, the Fed extends, or is looking to extend, its repo operations into mid-February. They said they were going to end it in January. Well, we're in January, so they're going to extend it yet again to February. And so when we get to February, they'll extend it again to March, and you get the picture. They'll keep can kicking, and that's just what they do. There's no way they can get themselves out of this situation. So we'll look into an article that actually found out of Bloomberg that talks about this very extension of repo operations. And if that was not enough, out of Benzinga, Fed also talks about changing the repo market, the way it functions. Again, they're going to can kick people. They're going to change and move the goalposts. Whatever they have to do to keep this market alive. We just hit all-time highs as well again today in the Dow Jones. We'll take a look at that in a minute as well. But this is again out of Benzinga. We'll look at this and I'll kind of explain how Bitcoin ties into this. If you guys haven't heard, my non-crypto viewers, Bitcoin rallying up over 10% at one point yesterday. We're going to see what and how this plays into this global system and this global crisis that we're seeing happen right before our eyes. So stick around for that. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. CNBC, Dow Jones Industrial Average hitting another 52-week high. It didn't close on its highs, but it did touch 29,051 bucks, 54 to be exact. Crazy what this market is doing. It's just going straight parabolic. If you look at a couple of these stocks like Microsoft, Tesla, I mean, they're just going parabolic, and this can't be healthy. This can't continue forever, but it can continue for a little while longer, just not for forever. So that is the challenge we deal with. Picking the tops, well, you never can pick the top. You have to just scale out of positions and scale into positions. So if you do have your money in your control, there's no better time to be in control of your money in the stock market. If you're in the 401k, different subject. And I feel sorry for those individuals that can't take advantage of locking in some of these gains that we're seeing right now. But yes, Dow Jones did close today at 28,938 bucks. February contract for gold on the COMEX closed up 7 points to 1,551 bucks, and gold is trying to rally back. We did see a nice rally from gold starting yesterday, so we'll see if we can get back to those highs. But we did drop all the way down 4% off its highs, its most recent high of around 1563, but it is far from its highs of 1,575 bucks. So we'll have to see what happens here. I'm not too confident in seeing gold really make substantial moves, and I guess I'm probably a little spoiled here, because if you haven't noticed, Bitcoin and the crypto markets are on a tear. Yes, it's down 2.5%, 2.7% today, but if we look at the rally it's had in the last month, starting with some of the Iranian missile strikes and off the backs of us killing Qasem Soleimani, Bitcoin has rallied over 25% in the last month. So strong moves in Bitcoin. And again, I tell you guys all the time, this is the asset to be in if you really think something is going awry, something is geopolitically and traditional asset class like the stock market. If you think there's going to be turmoil there, it is probably a good bet to have some money in Bitcoin. Not giving financial advice, but you could take a little bit and make it out a lot in the next few months if things start to really crumble with the stock market. And even if not, there's no real correlation with Bitcoin at the moment with traditional assets like equities and bonds. And so maybe that can be a gift and a curse. I don't know. We'll have to see how that pans out. But on to the main articles for today. Bloomberg, the Fed announces plans for repo operations through mid-February now. Federal Reserve Bank of New York on Tuesday announced plans to conduct repurchase agreements operations through until at least February 13th, although the size of the term operations will be trimmed to $30 billion from the start of next month, they say. I don't even believe that. The central bank did not elaborate on its plans beyond that. The move extends the program that has been in place since it stepped in to combat funding market turmoil in September of 2019, but indicates the central bank may have one eye on the exit. Again, I believe it when I see it. I'll believe it when I see it. It announced plans to conduct a series of term repo operations from January 16th through January 30th of about $35 billion apiece, in line with the most recent similar action. Those scheduled from February 4th to the 13th will have a maximum offering size of $30 billion. The newly scheduled operation will provide liquidity through to February 27th. The maximum size of the central bank's daily overnight operations, meanwhile, will be kept steady at $120 billion. These are slated to continue until February 13th. And so BMO rate strategist John Hill said this is consistent with their assumption that the Fed will back off slowly and make sure not to rock the funding boat. Fed has been conducting repo offerings and treasury bill purchases in a bid to keep control over short-term interest rates and bolster bank reserves. That has calmed markets since September's spike that took overnight repo rates as high as 10%. And this move by the Feds helped quell concerns about potential cash crunches at the end of December. And so in the minutes from December's Federal Reserve Open Market Committee release last week, Lori Logan, manager of the System Open Market account, said January's calendar could reflect a gradual reduction in offerings, though indicated that some repos might be needed at least through April, when tax payments will reduce reserve levels. It's no maybe here. We know that they will continue this thing even past April. We're going to go into the end of the year, in my opinion. And you guys let me know your thoughts about that in the comments below. Do you think they're really going to stop in February? And do you think they're going to totally stop its offerings in April to give some float through tax season? I highly doubt it. The Fed also announced Tuesday that it planned to keep the pace of treasury purchases it conducts unchanged. The central bank will buy $60 billion a month of treasury bills for reserve management and $20 billion a month of treasuries of various types of reinvestment purchases, according to the New York branch's website. And so with all that being said, not only are they going to continue this program, there's now rumors that they are going to be changing the repo structure altogether. And this is out of Benzinga.com. Said liquidity in the repo market spooked investors in the second half, but the potential fix reportedly is that they're considering completely overhauling the current repo market and instead begin allowing the repo market clearinghouse, the Fixed Income Clearing Corp, or FICC, to lend directly to small banks and huge hedge funds. Do you hear this? This is major news. They want to lend directly to small banks and hedge funds. The latter here, hedge funds, in my opinion, means direct monetization of stocks. The article says this change would essentially eliminate the larger banks' middleman from the processes and provide direct source of overnight loans for small banks. So in theory, this change would reduce uncertainty and risk and reduce the chances a freeze in the repo market could disrupt the financial system. However, providing wealthy hedge fund managers with a direct path to Fed lending via the FICC might not sit well with the average American, because the prospect of a taxpayer-funded hedge fund bailout would likely trigger political backlash. And while proponents of the potential changes argue it would add liquidity and transparency to the repo market, opponents are concerned that the changes would be seen as the Fed giving the green light to hedge funds to increase their leverage and make riskier bets. That's exactly what it's going to be. This is nothing more than, as I stated before, a direct monetization of stocks. Now, this is where we're going. I don't hear anyone talking about this, but this is clearly the path we're going. And I have full confidence this is exactly what's going to happen. They have to keep this stock market heading higher. And this will also indirectly help bonds, in my opinion. Earlier this month, the New York Fed injected another $56.7 billion into the repo market in an effort to keep Fed funds interest rates in line with the Fed's target range of between 1.5% and 1.7%. Fed also said its balance sheet grew from $3.8 trillion in September to $4.17 trillion by the end of the year, in just that short of a time frame. The big picture answer is that the repo market is broken, says James Bianco, founder of Bianco Research in Chicago, who told Market Watch back in December that essentially they're medicating the market into submission, but this is not a long-term solution. So what is a long-term solution? Well, I think what we just read is the longer-term solution, to just allow hedge funds to directly borrow money from the Fed window. And again, this is a reason, I think, partially, but more so geopolitical reasons, why Bitcoin has surged in the past couple of weeks. But this is definitely, if this actually comes to pass, you are going to see Bitcoin continue to go higher. Gold may go higher as well, but at the end of the day, you're looking for returns. And so where are you going to get the most returns? It's not going to be in gold. I'm sorry. You know, if you have physical gold, okay, that's fine. But why not have a stake in something like Bitcoin, where you can go buy triple or even quadruple the amount of physical gold after playing this trade with Bitcoin? It's just my opinion. That's how I'm playing it here. And this article, last article out of the Bitcoinist, talks about this very thing regarding Bitcoin and it's solving global central bank monetary issues. It talks about how the US is not alone with its central bank monetary madness. A similar situation has been developing in China, where years of strong economic growth are starting to slow down. This chart illustrates what central banks have been doing over the past few years. And so if we look at this chart, you'll see the purple one is the PBOC, and that's the People's Bank of China's balance sheet. And if we look at this chart, it really tells a story for us. As you can see here, this is 2008 crisis, when the Federal Reserve out of nowhere pumped in trillions of dollars and started its path to down a dead end road, if you ask me. We've got the PBOC, which is the People's Bank of China, the purple line here, continually heading higher. They've been doing this for many years now, but as you see, there's some interesting things that we see happening here. At this point, the balance sheet surpassed the Federal Reserve's balance sheet and just continued to go higher. It did it here, later fell back below the balance sheet as they continued on with like QE2 and Operation Twist and all that stuff. But now we're seeing the Fed start to catch back up here. And that started at the end of 2019. The repo operation started to begin. And as you see, we're starting to head higher. But will it be able to catch the PBOC? I don't know. I think so. I really do. I think so. They're going to print so much money that they're actually going to add to their balance sheet and surpass the PBOC probably in 2020, 2021. They're surely going to pass the ECB's balance sheet with in maybe in the next couple of months here, next month. So things are starting to heat up again. And so these are the telltale signs we need to pay attention to. And so they're saying that Bitcoin solved this by being the only form of currency with a truly finite supply that cannot be manipulated by overbearing authority. By its very design, it attempts to remove trust from established financial institutions of the world and place power back into the hands of the individual. As Satoshi Nakamoto wrote, the central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. And so coupled with the immutability of the blockchain ledger, it means that Bitcoin is also the first currency to be totally transparent and incorruptible. To date, Bitcoin still remains the only currency which cannot be quantitatively eased on demand by global institutions, meaning they can't print more Bitcoin. So at the end of the day, what we're setting up for, and we've never seen, I've talked about this on many of my crypto related videos, and I talked about it on the live stream I did last night. This situation we're in right now when it comes to cryptocurrencies is a scenario we've never seen before. Bitcoin was birthed out of the last crisis. We haven't seen Bitcoin in a crisis, and you see the returns and the appreciation against fiat currencies that has happened. 9.5 million% appreciation against the US dollar. What's going to happen when we go into another financial crisis? Will we see another 9 million%? Who knows? But I'll tell you this, we're in uncharted territories, and I'm just excited, and you should be too, holding this new asset class. That's my 2 cents on the subject. Let me know yours in the comments below. If you found this video informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. I'm out of here, people. Holla!